Good day. This is the Tax Platform informing the nation on tax matters. We are back this week with another episode, and this week we touch on one of the most contentious issues, especially at the industrial court, where former employers and former employees are always battling it out, and where an employee gets compensation. Sometimes there's argument on whether tax should be withheld on those payments or not, and the words that the court normally uses is deductions. Now, in terms of the Income Tax Act, compensation is regarded as employment remuneration, and the unfortunate thing is that the word compensation is not defined in the Income Tax Act, and therefore we take it in the literal general sense that encompasses all types of compensation. And the industrial court has, under several judgments, stated that compensation payments that come as a result of a court judgment are not subject to tax, as they consider it not to be employment income. And the argument most of the time is centered around the non-existing employer-employee relationship at that moment, or the master-servant relationship. But then in terms of the Act, the Income Tax Act says that in all other aspects, when you talk about employer-employee relationship or employment, you will look at it as a master-servant relationship in all other contexts except for the Schedule 5 that talks about deduction of tax. So when you look at deduction of tax, you just do away with the issue of master-servant relationship and read it within the context of the definitions of employee within that schedule. And the definition of employee in that schedule includes a former employee. So if you are dismissed and then at a later stage you are paid compensation by your former employer, you are regarded as an employee of that company of business. I repeat, if you are dismissed by your employer and you battle out in court for your maybe unfair dismissal, and at a later stage you are compensated, you are regarded as an employee of that former employer in the context of the Income Tax Act for deducting of tax purposes. So that's why employers or former employers always deduct tax from you, from the compensation payments that you receive. So the question that is always asked, or that should be asked, is that are you a former employee receiving funds from your former employer as compensation? And is that compensation arising from a dispute that is related to your employment or former employment? If that is the case, then tax will always be deducted from such payments. And despite the industrial court on several cases saying that tax should not be deducted, in terms of law, strictly speaking, it's an error. And that's why most of the employers continue to deduct, even though the court has said that they shouldn't deduct, because it is stated in the Act that they should deduct, because in the Income Tax Act, you as a former employee, you are an employee for the purposes of tax. And therefore, unfortunately, your employer or former employer will always deduct tax, whether you are reinstated or not. Thank you. Hope you had a good time and new revelations have been made to you this week. Remember, we are available across all your favorite podcast platforms. Continue to follow us and invite your friends to also follow us. Have a good day. Thank you.